Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman here with Dylan LeClair, Director of Bitcoin Strategy at Metaplanet.
Honored to be here.
Thanks for the time. You want to dive into Metaplanet, what's going on, deep dive, and we'll kind of fill around it?
Let's do it. Where do we start?
You want to start at the beginning?
Sure, we'll keep it. Yeah, I'll give a quick rundown. Well, I joined Metaplanet in May of 24. Metaplanet's Bitcoin journey started a couple weeks earlier. But it was kind of a zombie on the Tokyo Stock Exchange, commercial real estate, Pan-Asian commercial real estate company in its past life. COVID was a devastating moment. And so kind of sold all the assets, consolidated the debt, and was left with basically, one hotel property, a bunch of tax losses, and, lacking a strategy, really. And so the details on how, I joined Metaplanet aren't really all that important, but I think, safe to say, after I joined the team, it was kind of full bore ahead on, how do we replicate the success or strategy of, what Saylor and MicroStrategy had done. So we put out a maximalist manifesto on the Tokyo Stock Exchange in English and Japanese and said hey, this is our plan. We're going to issue equity. We're going to issue debt. We're going to take any cash the hotel generates and buy Bitcoin, even if it's not that meaningful. And it was sort of radical because, it was like a maximalist manifesto, it's like Saylor GPT wrote it up. And, I think in Japan, not only has that not been done or said before, but if it has been said or done, it's like Web3 digital asset agnostic, versus we were no, we're Bitcoin first, we're Bitcoin only, very strongly worded. So, the market seemed to like it. And, we were still, it wasn't, we weren't really at a scale. I think in July at the Bitcoin conference, I had a panel or two, and we were up there with the CFO of MicroStrategy and Eric Semler of Semler Scientific. And, we were kind of only had like $10 or $20 million of Bitcoin, which is a lot of money for an individual. But for, when we're sitting next to, a company with $45 billion of Bitcoin or whatever they had at the time, maybe like 20, it was a little, not intimidating, but it was like, we got to earn our keep, I guess. And so we did a rights issue, which is pretty uncommon. Rights issues are, usually struggling companies, companies that need to consolidate debt. It's a dilutive move. So shareholders, a strong company never does a rights issue. And so what we did is, we said, every shareholder can buy an additional share at a discount to the market. And you would think theoretically the stock was at 600, and we said, you have a right at 555 yen. Theoretically, the stock should have gone down. That's what the efficient market hypothesis says. And then, the rights issue price is here, or the stock's here, the rights price is here. It should go into the middle. That's what the efficient market hypothesis would say. And our stock went limit up for like 3 days in a row. And so I think that was a moment where it was only to raise $70 million, but our market cap was 80 million. So I think that was clear that the market had an appetite for Bitcoin in a market where there is no Bitcoin exposure. So there's no ETFs, there's miners, no Coinbase, no MicroStrategy.